G'day folks, it's Jim Langlands here from FX Chart. So we're going to have a quick outlook at the currencies for the coming week, which following Friday's non-farm payrolls number, looks as though the US dollar is going to continue in its one-way street higher against most of the majors. We'll start off by taking a look at the euro, and realistically the euro looks as though it's still headed quite a fair bit lower. Personally, I think it's going to parity and a lot lower than that, although that's for another day. But looking at the 4-hour charts on Friday, as you can see, we've come down here. We made a new trend low. We broke down below. Well, early on in Europe, actually, euro did break lower. I guess that's partly on account of the fact that the ECB are due to commence their quantitative easing program today. But the non-farm payrolls provided the real action and sent the euro down to 108.40, 108.30, where it closed the week right on its lows. Now, the indicators are pointing lower, although the 4-hourlies are becoming oversold. So the targets that we should be looking at, I think, are probably for the coming session. With this channel here that we've been in, I'll show you a bigger version of that on the dailies in a minute. But that comes in at about 108, and then the smaller channel outlined by the brown lines, that comes in about 107.5, 107.60, and that ties in quite nicely, as you'll see in a second, with the 2003 low for the euro. So if we do go further out, this is the channel I'm talking about, which goes back to, well, it's just over, I guess it's started here, really sort of early to mid to 2014. And we're coming down here, so we are approaching quite strong support, and I think while I do think the euro is headed a lot lower, as I say, I think some caution is probably warranted on the downside. The daily MACDs are not really carrying through. We might get some bearish divergence coming through here, and once again the dailies are at oversold levels. But having said that, I don't think we're going to buck the trends too much, but we do need to look out for bounces. If we go right out to the monthly chart, now this is where I'm really getting my view from, and I personally think we're in a major head and shoulders downturn here, and if we just narrow that up, the target for this head and shoulders would be somewhere down here. We've got the head here, various shoulders, the neckline here, and if the measured objective from the top of the head to the neckline comes down to actually it's just under 80 here, where this 100% objective is. So we've got a long way to go yet. Having said that, once again, the stochastics and the RSIs are particularly oversold. Now they're the more sensitive indicators, and we could get a bounce, but the monthlies are still pointing way lower. So I think we've got plenty of room to come, and if we do get below this sort of support here, this is what I talked about just now. This is the previous low, the 2003 low. This is about 107.59 actually was the point. I can't get it that accurately on the monthly chart. 107.59, which pretty much ties in with that channel I just showed you. So we're going to see support there, and then on the way down, there's further support here down around 105.90 on this trend line here, and down around parity here, where it kind of meets in with this rising trend line as well. So we're going to slow. I think momentum is going to continue, but I think it's definitely going to slow down now, which we're going to get bounces, but I do think they're going to give us really opportunities to sell into. Let's go back to the dailies here. And realistically, if we do see a bounce, the top of the the top of the channel here is way off at 112, 113. Now I don't think we're going up there. Let me just get this Fibonacci level right, and where are we there? And that's 112, 113. The previous trend low, 110.97, was where that came in. So you know, you've got to allow for bounces, but as I say, the overall trend is still lower. This week, what have we got? I think we've got a Eurogroup meeting today. We've got the Centix due later on today. For the rest of the week, we've got the EU CPIs due on Wednesday. The US retail sales and the on Thursday, as are the business inventories and the industrial production, EU industrial production, that is. We got the US PPI on Friday, so it's going to be quite a busy week. But there's no doubt that the ECB would like the euro lower, and I think the quantitative easing program that we're going to see unfolding over the next few months is going to help it on its way. So that's the euro. We'll move forward to dollar yen. Now the dollar steamed higher in dollar yen. This chart's a little bit messy, but it steamed higher to a high of 121.29. It rebuffed that a little bit, came back to finish about 120 3/4. But it seems to me that we're probably on our way to this high here, which is back in December, 120.184. Dollar yen is pretty choppy though, but as you can see, it is a bit messy, this chart, this 4-hour chart. But we are in an up channel, and let me just move out to the dailies, which gives us a bit more of a view. So that's 120.184, 120.189 is where we got to the other day. In the short term, I think we're probably going to see support now at about that previous high, 120, so 120.48 in fact it was. And I'll be very surprised to see it back under 120 in the next couple of days. Once this level is taken out, then we really need to go right out to the monthly charts, and we get it up to here, which is so this 124 level, 123.80, and then beyond there, I think we're on our way. Having said that, the monthly charts are very overbought. Dollar yen's been very choppy recently, so while I think it is going to go higher, I don't think it's going to be an easily fought move. Or an easily won move, I should say. Beyond this top, once we get above here, this channel that we're in as well, that currently the level there is sort of 120, 180 or so. So I think if I was long dollars, I'd be looking to take some dollars back there and look for a dip to rebuy into. But the 100 and 200 hour moving averages are going to support it just below 120, and I don't think we're going back there. But as I say, the 4 hourlies look as though they're winding up to head higher, as do the dailies. So while I like the long dollar position, I think there's probably easier currencies to trade than dollar yen at the moment. But as a structural position, as elsewhere, probably stay long dollars. Now moving forward to cable, and cable well, that took a bit of a beating on Friday after the Northern Farmers, but it's held in above 150 so far. It looks to me the daily charts are pointing lower. Once again, the more sensitive indicators are pretty oversold. So we might see cable stay above 150 for a while, and we've got this sort of trend low down here. This is around sort of 149.5 down here. So I think that's going to provide some reasonable support. But further out, I think cable is headed lower. We've got the UK election coming up in 6 weeks' time. There's a real danger there of a hung parliament, and it looks as though the Greens, the SNP, the Scottish Nationalist Party, and UKIP are probably going to win a few seats between them, and which is going to make UK pretty difficult to govern. I think the Tories will probably lose a lot of their power. Which will also disallow the chance of a referendum that David Cameron has promised on a vote on membership of the EU. So all up, I think sterling, it looks as though it's in for a pretty difficult stretch over the next few days, or the next few weeks even, I should say. As for today, well, this low down here, 149.85, 149, sort of 55, 60 area, that's going to provide interim support. The 4 hour charts are oversold, as are the stochastics and the RSIs. So some kind of bounce wouldn't really surprise to me, but the trend is lower. You've got to look for levels to sell sterling, and I'd be surprised. You know, we could get back to 151. We could even get back up to this sort of level, 152 area. I doubt we're going very much above there. And as we head further out, sterling has broken down, and it looks to me the next major support, the move here, the next major support is 61.8. Now that comes in as about 148.60. That's is that right? About 148.60. Well, sorry, 149.10. There you go. That's going to be support, but a break below there, then we're heading back down here towards sort of 145, 146 area. Don't think that's likely to happen for a while. The weeklies are a bit inconclusive, and sterling, the longer term charts, well, they are pointing lower, and I think the longer term dollar bull trend is still well underway. Dollar Swiss, I'm not going to bother with. That's all too hard. And the charts are not real good, but it does look to me as though dollar Swiss is heading back towards parity, and support here for the time being is about 96.5. Not sure I'd get too involved, but looking to buy dips overall. The Aussie, that was painful on Friday. Aussie was painful most days, but recently, but it squeezed all the way up from 77.60 to sort of 98.40 on Friday, right ahead of the non-farms, but then collapsed after that. So we had an outside day, and I think we're probably heading a fair bit lower in time. I'm not sure whether this is a head and shoulders top or not, but if it is, well, we shouldn't really go back above above 77.50 now. Sorry, did I say 97.50 earlier? I think I should have said 78, 77, big figure. So we shouldn't really go above 70. This line here, the neckline 77.50, 40.50, and I think we're probably headed lower. If we do if this is our head and shoulders, then we are heading a fair bit lower towards the RBA's 75 objective. In the meantime, short-term support comes in around this sort of 77 the figure area, and then below there, this is about 76.90 actually here. We've got some more support here at 76.40, and the trend low at 76.25. Further out, the channel which has contained the Aussie for quite a while now. Now that really could head lower. The bottom of the channel right now is down around 73 cents. I think eventually we're going there, but being the Aussie, it's going to be a painful move, and the market's already pretty short, so just need to be a little bit careful on the downside. But once we go through 76 and the RBA's objective is at 75, my own view is that the Aussie's got an awful long way to go. And as with the euro, shoulder, head, shoulder, neckline, objective down around 60 cents. So even below 60 cents. So that's something to keep the bears going for a while. The 100-month moving average has been a bit tricky. That's at 77.60. So that's the reason we've had this gyration here. But if we can break away from that, then I think we are going to see an acceleration to the downside, and we're heading down towards this sort of support level here, down around 70. Sorry, 72, 73 cents, and then eventually, although probably not till 20. What are we now? 50. So it's probably not till 2016, 17. But I think we're heading all the way down here. The Kiwi, equally, that's been fairly difficult to trade in the last couple of days. Been up to 76.13, back up to 76 on, or just, sorry, 75 on Friday, 75.15 I think was the high. Yes, and then it fell heavily after that. So we've moved down from the 76, back up, down, and now we're sitting just above the FIBO support, which is at about 74.45, I think. 73.45, I beg your pardon. Below there, we go down to this previous low. That's down around 73.10, and then down here we're really marching down towards sort of 72.80, and the trend low, which is at 71.75. The 4-hour charts are negative, and generally pointing lower. So I don't think we're going too high today. The 74.35.40 will be short-term resistance. This 61.8%, which was previously support, that will now be resistance. Before then, the hourly charts, well, the moving averages there aren't really even seen till 100 and 200 aren't seen till back up to 75, so they're not going to come into play. And likewise, I think we're heading a fair bit lower, and probably eventually back down. I wouldn't be surprised to see the Aussie back down here at sort of 65, 70 cents, but that's a long way yet. And we've got various supports in between here and there. So on the day, I think look to sell rallies above or towards 74, perhaps a bit higher, but eventually look for a break of 73 and lower. While I'm here, I'll have a look at some of the crosses first. Actually, then we'll have a look at the dollar index. Actually, while we're on the dollar, I'll do the dollar index first, I think. And as you can see on Friday, this is a monthly chart. We made an important break higher of the 50% move lower from above 121, above 120, I should say, 121, down to the lows at about 70.69 and 70.65. This 50% is at 95.81. We made a clean break through that on Friday, finishing at 97.67. Now the monthlies are pointing well higher and have room to go further. So the next real port of call is not really until this March high here, which is where is that, 99.49. So that's that move there, and then above there the 61.8% retrace will be at 101.75. Now, as I say, this is a monthly chart, so we're looking a little bit further ahead here, but I think that's the overall direction of it. We'll come back to the dailies, and as you can see, it's the dailies have had more or less a straight run up, but the MACDs are pointing higher. And I think we're probably going to continue to motor on north. Support though, we could see a correction. That 95.5 level that we well, 95.85, which is this level here, and then 95.50, which was the previous high around here. They're going to add. They're going to be supports. So a break back below there would that might be a bit troublesome for the dollar. I don't think we're going there, but it could be troublesome. But we'll keep an eye on that. I don't think we're going to do anything this week, particularly with the QE program starting in Europe. So, but that's the dollar index. It does look as though we're heading higher, and buying dips in the dollar does remain the game plan. Right. So now back to the crosses. And I'll just cover a few of the major crosses, otherwise this video gets too long. Now, Euro Yen here, that's kind of made a kind of rounding top, and we're coming down to approach these previous lows down here, just above 130. Now the 4-hour indicators are pointing lower, and as I said earlier on, I think dollar yen's going to remain, while it remains well bid, it's going to be choppy, but I think the euro is heading lower, so the cross should continue to head south, I think. The dailies seem to be pointing to the same effect. Now we have got some decent support just here, sort of this 130.80, 130 sort of 20 area. So could prove troublesome in the next couple of days. But once we break down below here and broke below 130, then I do think we're heading lower. And there's not really an awful lot of support down to around 128.5. And below there we can go even lower. But I think I'd be selling rallies. I'd be looking to sell rallies to around 130, 132, 132.5 at the moment. Looking for that break of 130 and for a move down towards 128.5. Sterling Aussie, that was pretty tricky last week. I bought it on the base of this channel. We saw a nice. That was at 194.90. We saw a nice rally to 196.30, and I thought we were going higher. And instead of that, we saw a nasty spike on Friday down to 193.90 before an equally sharp bounce back to 195. Now, the 4-hour charts are a little bit inconclusive here now, but having broken below the base of this channel, if the Aussie can keep going, there's good support here. Around this sort of 190, around this 193 3/4 level, 193.60, which is the first major FIBO support. But if we break down below there, then we're going to run into this high down here. It's about 190, 193, and below there we might head back down here to sort of this 190, 189.50 area. But as long as we stay in the channel though, and so keep an eye on this here around 194.5, 194. As long as we stay above there, then I think there is a chance we can still head a bit higher. The dailies are not supportive of a move like this at the moment, though. It does look as though selling rallies, if we do see a rally to 196, 196.5, that might be a sell. And the weeklies equally, they look as though they might be turning over. We've also got some bearish divergence on the weeklies, so it's going to be choppy this week. But I think possibly we should be looking to sell it for maybe a bigger move lower and back towards this 190 area and possibly a little bit lower over time. Next up, Euro Sterling. Now, Euro Sterling is a one-way street, really, and it's come down an awful long way, and it still looks pretty horrible to me. But Sterling's got a few potential hurdles of its own coming up, not least the general election. So although I kind of like the cross low, we really need to go out to the weeklies here now. I think that there is support down here, and it's down around sort of 71 now. We're only at 72 at the moment, so we're 100 points away from major support, and the weeklies are pointing lower, although the more sensitive indicators are very oversold now. But we've come down more or less in a straight line from up here at 87, so some kind of bounce should be expected. And I would think that let me just get that right. I would expect that as we head towards the general election, the momentum to the downside might slow. We could get a bounce back towards 73, 73 and a half, possibly even a little bit higher. But this FIBO resistance level here, so 73, 70, 80, that's probably going to cap it. And then this previous low here, just around 74, sort of 20. I would be looking to sell into that because I do think eventually we're probably heading down towards this level. Equally, we've got the 100-month moving average here at 200-month moving average at 73.60. So I don't think we're probably going above there for a while, and I'd use that as if we were selling into strength, use that as a stop loss. If they go above there, then we're probably making a more decent reversal. But for the time being, selling rallies, looking for a move back down towards 71, and if we break the base of this channel, then I think we are heading a fair bit lower. But the UK election is going to have a big say in that, but the euro on its side is going to remain weak anyway, I think. And as I say, we're heading down towards parity in the euro. But I do think we're also heading lower against sterling, but I think it might just be at a slower pace. Now what else we got? That's probably about it for today. Actually, this has gone on for too long. This video is 23 minutes. So anyway, it's some food for thought, and we'll leave it there. And I hope that this helps you out with your trading. We've got a fair bit out this week, though. One of the highlights will be the RBNZ rate decision on Thursday. As far as the Aussie goes, there's a lot of Chinese data out this week to keep an eye on. I've already mentioned the EU and US data, and as far as Japan goes, we've got the GDP coming up today. So it's going to be a pretty busy week all round, and that's about it though. So good luck with your trading, and we'll talk to you next week. Cheers.